Hola, welcome back to another fresh episode of Karishma Connect where I got talking to Mr. Prantik Mazumdar. Now, Prantik is another top 40 under 40 from Singapore, and he on LinkedIn reads as proud father, digital transformation catalyst, managing director at Dentsu Group in Singapore, taking care of their customer experience sector. He's also an angel and venture investor. Now, he talks about public policy, entrepreneurship, digital marketing, and I've got him on Karishma Connect talking about all of that and a lot more about investing. So, go check out the interview, there's a lot in there for you. And until next time, keep connecting. I'll see you soon.
It's a pleasure to host you, and I'm really looking forward to sharing these questions with you. So, thank you for making time. And let's begin. Yes. So, before anybody who comes on the show, I just tell them that you tell your journey best. So, if you could kind of, in a nutshell, I know it's been a very long one. I keep scrolling on LinkedIn when I'm seeing your page, but can you tell me in a nutshell what's it been like?
Yep, it's been a good 39-year journey. So, in a nutshell, essentially, I grew up in India. I'm a Bengali, but I was brought up in Pune, and my family moved to Indonesia thereafter. So, very fortunate that I got a chance to live both in India as well as in Indonesia between the age of 13 and 18, and that was fabulous. I mean, we had a very wonderful time in Indonesia, and was my first experience, in a different culture. And I moved from a boys' school to a co-ed school, a multicultural school, and Indonesia, is lovely. So that was fantastic. And then for the last 20 years, I've been in Singapore, and the 20 years in Singapore can be broken into maybe three or four blocks. So the first 4 years in university at NUS, where I pursued a major in computer engineering and a minor in technopreneurship, which kind of gave me the first feel of what entrepreneurship in the domain of technology could be. So very grateful to NUS for that all-rounded development, for the fact that we had lots of ECAs, for the fact that we were allowed to attend classes outside of our major, which I think is a huge thing. I think because you make choices or you are kind of compelled to make certain choices, but once you're in uni, I think the 4 years should be all about exploration and experimentation of any sort. I think fixing into something at that early stage, I don't think it's wise. So I'm happy Singapore gave me that opportunity. And I joined the Singapore government thereafter for the next 4 years. I worked for International Enterprise, which is now merged into Enterprise Singapore. So my first 3.5 years was a fantastic experience into how a government body should ideally run. I think what I love about that system is they take young students, fresh grads, and throw them into the deep. So 6 months into my role, I had to lead industry missions to other countries. I had to work with other diplomats and delegates. It's quite overwhelming, but I think that's the right phase to kind of shake things up. And I think the breadth of exposure was fantastic. And thereafter, I worked for a couple of SMEs, small medium enterprises in the field of brand consulting and digital marketing. So it gave me a good perspective in the non-governmental, non-public sector side. I always wanted to taste what does it feel like to be selling, to marketing, because it's only when you start selling and keep getting rejected for 2 years, you kind of get grounded, you kind of get a good experience. And then I would say entrepreneurship. The next 10 years was all about happy marketer. Again, entrepreneurship happened accidentally to me thanks to my good friend and the original founder of Happy Marketer, Rachit. He was the guy who post NUS was very sure that he was going to start on his own, and he laid the foundation, a lot of hard work, but he pulled me in as a co-founder in 2011. And yeah, the last 10 years has been nothing short of magical in terms of just growing something from a small little seed, which organically was nurtured into something quite meaningful. And our idea was to keep running it, and but it so happens, in life you really can't have a fixed plan. Around 2018, we got an acquisition offer, which we pursued over time, and Feb 2019 is when we sold Happy Marketer to Merkle, an American brand under Dentsu, which is a Japanese conglomerate. And yeah, the last 3 years, so we have an earn-out period, and the last 3 years I've been at Dentsu leading one of their three service lines, the customer experience management service line in the Singapore market. And so that's my 20 years in Singapore. And well, in parallel to my day job, with Happy Marketer and Dentsu, I guess my other two passion areas is sports. So I love playing cricket as well as I love looking at the business of sports. So that's a big passion area. And the other is looking at startups, angel investments, and advisory.
I read digital transformation catalyst on your LinkedIn profile. And I wanted to ask you that what exactly do you think it takes to be a catalyst? Because that's a very unique word that you use there in today's times.
So catalyst for me, I think again the genesis, probably the first time I would have heard that is in probably a chemistry textbook, right? And the meaning probably remains the same. It's in an agent of change. And what does it really take? I think firstly it takes a couple of things. It takes time, effort, and an attitude to listen and understand the current scenario. So if you look at any strategy project or change at the end of the day, is you need to know where you are, you need to know where you want to be, and then figure out a path from getting from A to B. So I think step one is to really understand where is an organization, where is a person, where is an economy, depending on the environment you're working in, and then you need to have a very good understanding of the macro situation a company operates. So I would say having that strategic overview of where you are, where you want to be, and the path, I think definitely helps. But I think at the end of the day, to catalyze a change, it takes a lot of advocacy. It takes a lot of talking. It takes a lot of discussions. It takes a lot of pushing back. It takes a lot of people management, people, process, technology.
If you had to explain venture capitalist, I know you have a little boy, so if you had to explain venture capitalism to him, how would you kind of break it down in the most simplest ways?
Yeah, I like it when you ask this. In fact, I think every explanation should be either to a 5-year-old or to a 90-year-old, because it compels you to, I suppose, take out the jargon. So I think if I was to explain, it's about what I would tell him is that assuming you're working on a project and you're trying to make a toy, or you want to make a big, let's say, a Lego toy that he's quite fascinated about. You would need you would need the map, you would need the Lego pieces. If it's really gigantic, maybe you will need some people to help you build it. And to do so, you would need some sort of support, right? You would need people, you would need money, you would need space, maybe, depending how big is your Lego block, Lego structure that you're making. So to do all of that, well, you could, if you have all of that, if you're blessed with all of that, that's fantastic. Then you don't need someone to, externally to come and help you. But in many cases, you may need someone externally to come and help you buy those things, help and give you that space, help and show you that, hey, you know what, you want to make this big, let's say, Marina Bay Lego structure. But if someone has done that in the past, having someone on in your team will help you because they can shorten the time frame. So it's really about venture capital. To me is of course, money to help you buy those things, hire people, all of that. But it's also about someone who can accelerate your journey, help you do something that you want to achieve fast.
How then is angel investing different from, how are those two terms different?
Yeah. So I think, at a very simplistic level, usually angel investing is, I think two fundamental differences is that the VCs are obviously a larger company and they come in a bit later when things are a bit more stable, things have scaled, you have shown that a company has generated revenue or profits perhaps. So, when you have gone from step 1 to maybe step 3 in your 10-step journey, maybe the VCs start looking at you because their check sizes are larger, they are a larger body. Angels typically are individuals who are basically coming in even earlier, probably at step 0 or step 1. They believe in the person, they believe in the idea, they believe in the proof of concept. So usually angels come in when there is little revenue or no revenue. And, so they're believing in the whole category that you want to work in, right? So there's a lot of faith, a lot of gamble, if you will. There's a lot of gut feeling and conviction. Of course, there are aberrations where now VCs are coming in much earlier. There are aberrations where there's a whole trend of solo VC, where there are just individual VCs who just happen to, be a one-man or a one-woman team. They put their own money. They also collect money from other friends, other companies, and they manage it alone. But relatively speaking, the risk is relatively lower at the VC stage compared to the angel stage.
As a VC or an angel investor, how do you kind of assess the risk?
The few areas that I look at is, I would start with the category, right? So today, there are dime a dozen fintech, edtech companies, right? But I would need to first do an assessment of my conviction on the category itself, right? Because an investor is probably looking at 10 pitches right now at any point in time. So he or she needs to have a fundamental understanding and conviction on a category. And within those big bubbles, what subsets am I looking at? And how large is the category? Now, if your research says that the category is only, $10 million, well, nothing wrong. But as a VC, because of the high risk you're taking, you want to look at, something that can give you 5x or 10x return.
Yeah.
So if the bubble is small and if there is more competition, so your addressable bubble is very small. So first things first, I think you want to be looking at a sizable opportunity in the next, 7 to 10 years, right? It's a burgeoning field. It's a growing bubble. It's not too competitive. So I think that's one, right? Which is at a very macro level. Then I would look at the founders, right? You can be a good founder, but are you the right fit founder for this category? You could be a great founder for fintech, but if I'm looking at health tech, does that necessarily mean you will be a good founder for health tech? Maybe, maybe not. And I'm not saying that only trained doctors can be, good health tech founders. In fact, research probably shows otherwise, and hence there's a lot of gut assessment, there's a lot of reference check that needs to happen. Of course, if you know these founders from the past, nothing like it, right? There's an element of trust as well.
Yeah.
Then, of course, you would look at, because at that early stage, especially angel, we see maybe the company has still been around for 3-4 years, so you have seen some traction. But even at the angel stage, I do look at some customer feedback. So I have never invested personally at a PowerPoint level. I would at least look at that, at least 1 or 2 customers are willing to give them a shot. That they're at least willing to give it a pilot shot, right? So even if they make 100,000 revenue, I would be happy if it's 1 or 2 clients who have given them 2 or 3 projects. That means they like to work with these people. They trust what they're doing. They have tasted some success. So some quality of recurring revenue is good. It's a good to have, right? They look at who are the next layer. Are there stock options to incentivize them? Because many a times founders can be very greedy and they say, no, I'm not going to give stock options to my employees, which can then mean, hey, why should your employees work for you and not go and work for Facebook, Google, TikTok? The earlier the bet, the more subjective some of these assessments.
I'm talking to my dad or my dad's dad, then it's always going to be like, you start your own business and there's nobody else kind of putting money into it or something. It's about tum apna paisa banao and then dalo, that kind.
Very, very good question, and I think upfront, I want to say that as an individual, I've only run the business, the dhanda, like your dad and your granddad would talk about. So Happy Marketer was a services business, no external investor, right? So it's in that mold. And I think to youngsters, it doesn't matter, youngsters, oldsters, I think to me, at the end of the day, a business, a dhanda is a business. Whether it's venture backed, banked backed, your savings backed, your mummy daddy backed, it ultimately operates with that same simple formula of profit equal to revenue minus cost, right? And it's important to bear this in mind for 2 reasons. One is, yes, today there is, and I'll talk about it, but there is this whole trend of, every venture needs to be venture backed and startups and multiple rounds of funding and exit. But to me, I have the same amount of respect, if not more, for the salon next door, the baker next door, or the steel import exporter businessman, as in India, a businessman or a businesswoman, the way we would have grown up listening to, because he or she is trading, he or she is making stuff and selling, and nothing like cash, right? To me, at the end of the day, if you're making something or the service, the digital marketing service I'm providing, I'm providing something and the customer is paying. So what I genuinely believe is there is no better investment than your customer's money, because that's a proof that whatever that you're delivering, there is actual value. Someone's opening the wallet and giving you cash, or digital cash or Bitcoin, whatever. There's a value exchange, right? So I think that's first things first. So not that every businessman, businesswoman needs to have a venture-backed idea, right? You can very well run a business, a successful business, and make profit, because if you're making profit, consistent, sustainable, recurring profit, I think you're successful, right? You don't need to be in Live Mint and Economic Times with the fact that I've become a unicorn. I mean, that's one category, but probably bulk of India's businessmen, businesswomen are still, India has only about close to, let's say, 90 plus unicorns. Probably, I don't know, maybe thousands of other companies valued at 100 million and, maybe 10,000 at 10 million, which is great. They're all on a journey, but absolutely categorically want to put it that if you're running a successful business where customers are paying for your services on time and you have profit to show, I think that's fantastic. Because nothing like, because in that particular business, in most cases, you own the control, you own the equity, you or your one or two business partners or family, right? Next, you look at, at least in India, I know very few companies. I mean, the ideal situation is, you should be able to run that dhanda with 100% control. Why give shares to others if you can do it on your own, right? And I'll come to as to why you need to give shares and bring on VCs or others. But you look at a company called Zerodha in India, which is now number one or number two stockbroking app in India. They've built a massive unicorn level business without raising funds. Now, isn't that an ideal position to be? You run the business, it's profitable, it's scaling, and you own 100%, right? That's a nirvana stage.
Yeah.
But if you look at the startup tech world, what happens is you may want the third party investments from angels, VCs, etc. for 2, 3 fundamental reasons. Starting may you don't have the money, as simple as that, right? So you need to you can either borrow from the bank or borrow from friends, or you can say, you know what, I don't want to borrow, but hey, friends and family, I want the first $200,000 or I want the first 1 crore from your support if you're willing to put as equity, right? So if they like you, if they trust you, if they like what you're doing, they'll be taking a risk knowing that this money will never come back or may never come back, right? So you're taking the money because you don't have it, or because it's available at very, not as a loan, but, as equity. You may be willing to say, okay, I'll keep, rather than owning 100% of a $1 million business, I rather own, 50% of a $100 million business. So you're taking that money quickly because it's available to scale fast, right? So all of these tech businesses, you need the money because you don't have it. You need the money because you need to invest for the first 3 to 4 years to build something, get good people, and you want to scale, right? Because you want to kill competition. You want to, grow really fast, right? Because the dhanda category that you were talking about, whether it's today's people or the dads or the granddads, you'll see they were always running the business forever, for life.
Yeah.
Right? And you would run the dhanda and you would add new products, new shops, right? It's a nice, steady, there's always ups and downs, but it's a lifelong thing. But here people are looking at, you know what, there is an opportunity in the next decade. If I don't scale up fast and if I do the steady approach, there'll be too much competition. But because there is money available in the market, why don't I take that upfront? Why don't I give 20% to someone else, call this VC? Why don't I get their network, their expertise, take the money fast, build something fast, grow something fast, kill competition fast, and get to the, a sizable position, a dominating position fast, right? So it's really about that scale, acquiring skill set, scaling fast, taking care of competition as early as possible, because you essentially want to compress the time scale. Right? And the fact that you may not have that much money on your own to risk it all. So that's the reason. But mind you, you could be doing that, but it's, there is no free lunch. At some point, the investors will turn around and say, the Zomatos, Paytms, etc., which I've listed, at some point, market will or people will say, boss, it's time to show profit, because you can't be running a loss forever. What these guys are essentially doing, taking money because it's available at a decent rate and saying, you know what, I'll be loss making for the first 5-10 years. But at some point you've got to be. So you've got to be unit positive at some point. You've got to have a path to profitability at some point. Because otherwise it's not going to work, right? Because there's only that much time that the VC money will keep coming in. You're racing against time, right? So that's a huge difference compared to the other kind of businesses. So you look at Indian family-owned businesses, the Tatas, the Heroes, are public listed. These are massively profitable, massively large companies. Just that they're there to build a legacy. The game is quite different, right? But I would urge everyone, whether you're on this camp or that camp, equal amount of respect, because anyone starting a business, it's not easy. It takes a lot of time, conviction, courage, effort. And B, there has to be adherence to that formula of revenue minus cost equal to profit. So either you're making profit or you're going to have a path to that profitability.
There's a lot of buzz happening around NFTs and crypto and all of that. What do you think is that one, 39 years you've been in this, you've done so much of investing in everything. What do you think is that one tip that stays across the board for any form of new, form of investing that's coming through?
Yeah, so it doesn't, you're not the only one. To be honest, I think most people probably don't know what NFT is and what crypto is and all of that. And to be honest, I myself have not invested in that space. Neither do I have an NFT yet. I'm exploring, I'm reading. It's fascinating. It's a bit gimmicky, yet it's exciting. And it reminds anything that is new, goes through that adoption curve where initially it looks funny, frivolous, but so far what I've gathered is that the underlying technology of blockchain, I think that has a lot of merit, depending on the use case, use case in the government sector, in the banking sector, in the identification sector, cybersecurity sector. I think there's a lot of use cases of the blockchain concept, right? Crypto is one use case. So I think fundamentally I'm a believer in the blockchain, which is again, going back to the 5-year-old description, if there is a khata or a ledger where you keep track of, what's coming in, what's going out, a blockchain is basically a distributed public ledger which keeps a track of, let's say in a bank or a financial system, who gets how much, who pays how much. So it's publicly available, right? So, and it's hard or virtually impossible to tamper with. So it takes care of transparency, it takes care of visibility, it takes care of, permanency, so to speak. So that technology, I think, is very, very useful. And I really hope we get, for example, one of the companies that I invested, they use blockchain for, university certificates and transcripts. Now, many of us who've been to universities, whether in India, Singapore, wherever, you might find yourself for example, it happened to me. Someone needed my certificate, and honestly, I couldn't find it. And I realized, oh my God, the process to go back to my university, file an application, pay money, physically go, etc., could take me 3 months to get it. But imagine if all universities, and of course, there's a whole case of certificate forgery, right? People make fake certificates. But if it's on the blockchain, every university issues the degree or the transcript through the blockchain. So it's publicly recorded. So it can be retrieved anytime. It can't be forged because it's digitally signed. So, they're working on that. So it's a very interesting use case.
Yes.
Now, coming to NFTs and it's very interesting. All I know right now is a few of my designers, they are being able to sell their artwork for a decent price. They've been able to trade, buy and sell other people's artwork for a decent price, and they're making, a decent side income. So I'm assured at least that the fact that their money can go in and come out and they can actually make an income, that's assuring, right? What I'm also finding, again, I'm not into art, but I'm finding, like I was speaking to a company yesterday in India, they're trying to basically create this blockchain sort of mechanism to help artists in India to answer questions like, okay, what is the fair value for this art? Because again, what I never get is why is one art sold at $1 versus someone buys a painting for 10 million, right? It's probably subjective. It's but they're trying to help artists say, hey, you know what, in your category or your genre of painting, it should be $288 as opposed to $20, right? So they're trying to bring symmetry. Then they're trying to create a marketplace to say, hey, artists, why don't you, put your actual art for sale, but also why don't you put an NFT version of your art for sale? Because there are potential buyers who want to own the NFT rights for your painting. Now, it's a hard question. Whenever I talk to people, there's a good legit question about why would someone want to buy a digital art? Like if I can't touch it, if I can't put it. My answer is same. Why would I buy a physical art and of anything and put it on the wall, right? Ultimately, maybe people who understand art, there is a better description or answer. But for me, many people buy art for status. Right. Oh, I bought so and so painting. It's the same thing as, oh, I'm wearing Sabyasachi. I mean, sure, it looks good, but I'm saying it's a very interesting debate. Is a Sabyasachi worth 5 lakhs versus the same lehenga, the tailor making it for, I don't know, right? 50,000. So art, anything subjective is interesting. All I know is there is enough demand for it. There's enough curiosity for it, and it's something that I will continue tracking. I'm generally not someone who would dismiss new technology saying, hey, it's rubbish, this is a fad. I think it's important to, I think it's probably Aristotle who says that sometimes the best reaction is not to react, but to observe, right? You don't have to say, wow, this is epic, oh, wow, or this is pathetic, right? You can just observe, see what the market does, talk to people, learn. So NFT, that's my positioning. I am still an observer. I haven't bought, I haven't understood it completely yet. But blockchain as a fundamental technology, I think I'm a big believer in.
Perfect. On that note, thank you so much once again. That was very interesting.
Oh, thank you, Karishma. Thanks for doing this. Thanks for having me, and thanks for just doing what you're doing. It's always good to hear different perspectives from people from different walks of life. So thank you, and wish you all the best.
Thank you. Most welcome. Thank you so much.